All right, guys. Good evening. Welcome back to another session of training, guys. So today I would just show you how I do my analysis. I'll show you how I look at my technicals and the fundamental aspect of trading, so that you guys would have a clear perspective on how to trade. Okay, and also the essence of this recording is to show you how to generate trade signals. Okay. So, guys, I'm on TradingView. Not so many of us know how to use TradingView. Like I told you, I have a premium video that I have recorded to teach you how to use TradingView. If you're interested in that video, please chat me up or hit me up on any of my social handles. I'll provide the cost for you. The cost is just for $50. Okay. All right. So now let's head over to MT4. Okay. All right, so guys, MT4 is where we're going to start, you know, doing this analysis. And the currency pair we're going to analyze this night is GC, okay, Great British Pound against the Canadian dollar, okay. All right, so you know, these are all majors, as it were, okay. The pound and the Canadian, okay. Even though there is no cross of United States dollar, but this is a clear cross of of the top country's currency. Okay, Canada, Great British Pound. Okay, all right. So, guys, even though it's a cross, it's not a major currency; it's a minor currency. But because of the involvement of the Great British Pound here, it's a high graded currency pair. Okay. All right. So let's look at this. Let's look at what is happening in this market from the weekly time frame. You can see clearly that this market is in an uptrend. Okay, so clearly we are in um, a bullish market. Okay. All right. So what we should be looking out for is to look for opportunity to go long on this currency pair. Okay. So the next thing we're doing top down analysis. That's my approach. To looking for signals. Okay. So let's drop down to the daily time frame. We'll drop down to the daily time frame. Let's look at market structure again. Market structure is bullish. Okay. You can see that the market is making series of high, low, higher, high, higher, low. This is not a higher high, okay, but it was able to break structure here, okay. Let me show you what I mean, okay. This is a higher high, okay, but price was not able to break this high, okay, but it did break the high here, okay. This low was not mitigated here, so this the market is still in an uptrend, okay. I hope you guys understand me. I don't want to go into advanced market structure. That's not what we're here to do today, okay. So the market is still in an uptrend. This low has not been mitigated yet. Okay. Okay. So this low is market structure. All right. So now let's go look at the 4 hour time frame. All right. Now on the 4 hour time frame, sorry, this network internet is slow, but let's come back to daily time frame. Then let's go back to the 4 hour time frame. Okay. All right. So guys, you can see on the 4 hour time frame. Let's wait for this chart to reset properly. Let's wait for the chart to reset. Okay. Okay, so on the 4 hour time frame, let's make sure that this chart is moving. If the market is moving, then we'll be sure that this chart has been reset, or you do a refresh. Okay, so on the 4 hour time frame, we have a bearish market, okay, which is a downtrend. But let's zoom out on this chart. Let's zoom out on this chart to look at the overall picture. Okay, you can see when you look at the overall picture, this market is in an uptrend. Okay, this is in sync with the higher time frame market structure. Okay, so the market is bullish. Okay, it's buyer's market. Okay, all right. So don't mind what the bigger, okay, what the smaller picture as it were is. Look at the bigger picture. Okay, the bigger picture is the. We try to zoom out on the chart. Okay, now let's zoom in again. Now you can see this is overly a retracement. The majority of the market movement is to the upside. Okay. All right. So we've seen three market structure, three time frame market structure all in sync. Okay. So that tells us that we're going to look for a buy opportunity in this market. Okay. That's how to do it. My anchor time frame is the weekly time frame. My entry time frame could be 4 hour or 1 hour time frame. So let's continue. So when you look at this market, you can see that the moment the market is retracing, because the overall move to the upside here is bullish. Okay, so every other counter movement is a retracement. All right. So now from this standpoint, you begin to look for opportunity. So what I do, I try to bring out my trend lines, okay, and look for trend line, counter trend line break, okay. Um, the other thing we can see here, we can see a wedge, okay. We can see a wedge pattern, all right, guys. I'm a price action trader. I'm also a chart pattern trader, okay. These are all technicals, all right. So now you can see that this market is in an uptrend, okay. What chart pattern we've just created here is the falling wedge. Okay, a falling wedge in a rising market is a bullish continuation. Okay, so now this market has been able to break this upper wedge structure, which is this resistance. Okay, there's a break of this structure. We expect to see a pullback. Okay, then we'll look for opportunity to enter the market. Okay, so when I see a pattern like this, I want to get further confirmation. What that means is that you look for more confluence factors. Okay. All right, so let me restructure this chart. I don't want to see this green here, so I need to change that line. I want to make this black, okay? Um Let me make this black, okay? I say okay. Yes, I don't want to see that green kind of stick, okay? All right, so this is what we have in this market, okay? Now, two things I love for our time frame. It's very stable and it kind of gives me what I want to see, and it suits my lifestyle. Okay, so those of you who like the 1 hour time frame, don't don't bother. You could trade the 1 hour time frame. It's all the same. It depends on your lifestyle. I have a day's job, so I don't have all the time to sit in front of a computer to monitor the chart. So I swing my trades most of the time. So 4 hour time frame is my best time frame. All right, so looking at this structure here, you see that this market, it's a buyer's market, okay? Because that's what we've seen from the weekly and the daily time frame. So I'm good, going long on this market, okay? All right, so what we can see here is a break of this wedge pattern, a break to the upside. Two things, two entry strategy here. You wait for the break, you enter upon the close of the break candle. That's the aggressive entry. Or you wait for the market to go up, come back and retest the structure, and you look opportunity to, you know, go long, okay? But for me, looking at where the market is at the moment, if I have to place my stop loss, I have to place my stop loss as structure here or here. Okay, but here is preferable. But if you see the distance between the entry and the stop loss is quite huge. Okay, it's quite huge. So what we might do to mitigate that, that structure is to wait for market to pull back. Okay, so that we can look for a better entry. Okay, so we just have to continue to monitor this market. Okay, have to continue to monitor this market. Yeah. Now I have other confirmation factors I use here. I use the 38 simple moving average, or 38, you know, simple moving average, or any of these moving averages. It doesn't matter really. I use any of them. Okay. There are two moving averages I use. I use the moving average crossover. They're so very effective for me. I use them for confirmation. Guys, notice what I'm saying. I only use those for confirmation. If I've gotten my market bias, straight on, I know where I want to see the market move towards. Okay, but if I don't see that, my confirmation indicator should you know should should give me added proof. Okay, added confirmation that the market is going to move in that direction. Okay, so guys, it depends on your strategy, but this is my strategy and it's been working for me. All right, so I just want to introduce two moving averages, simple moving averages or exponential, anyone you choose, they are all the same thing. So let's leave it at exponential. Okay, 35, okay, 38, sorry, period, then black. Okay, all right, so I want to take in this moving average. It's quite thin, so I want to make it bolder. All right, let's make it bolder. Okay, all right, then the second moving average is the 8 moving average. Okay, exponential moving average, please. So 8, I want to make this red. Okay, all right, so these are my confirmation indicators. Okay, now when they cross, they confirm my direction, and you can see that the cross is about happening here. Okay, it's about happening here. So I wait for that to happen. All right, so let me just remove these indicators. We don't really need them for now. I can leave this other 38 period moving average. Okay, fine. So I'll continue to mark up my chart. So first of all, I want to bring up the currency pair. It's important so that my my audience will see clearly what currency pair we're analyzing. Okay, so for me here, just follow me and watch how I do it. Okay, this is Great British Pound against the Canadian dollar. Okay, and this is the 4-hour time frame. Okay, this is the 4-hour chart. All right. Okay, so I take this to 28. Okay, all right, fine. So I take it to the side here, anywhere you can position it. So clearly, my audience has seen that this is the currency pair I'm analyzing. Okay. The other thing I do is this: I put my annotation. Okay. Here, I want to say this is a rising wedge. Okay, rising, rising wedge, rising wedge pattern. Okay, rising wedge pattern, and it is a bullish continuation. Okay, bullish con, bullish continuation pattern. Okay. So I give this say 10. All right. Okay, fine. So this is the word pattern. Okay. So what am I expecting? What am I looking at for here? I'm looking out for a buy trade opportunity. Okay. Let's say long trade opportunity. Okay. That's what I'm looking out for. I want to make this 12. All right. Good. Okay. All right. So what is the direction that you're looking for? You're looking for the market to go to the upside. Okay, so use this arrow to indicate your directional bias. Okay, the directional bias. Okay, okay, so this is the way I do it. All right, so I also want to bring out where my area of concentration should be. My area of concentration is here. I want to monitor what price is going to do here. Okay, I could make this red. Okay, just to bring it out a lot more brighter. All right. Okay, so my focus is here. This is the work pattern. This is my directional bias. Okay. I also want to indicate that my confluence factors are the moving averages. Okay, cross. That may not be important for now, but what is important is for us to know that our directional bias is um is bullish. Okay, so these are the technical angles. So now let's look at the fundamental angle. We're looking at the British pound and the Canadian dollar. So let's go to forexfactory.com to see what the what is going to happen with those currencies. For Thursday, for Thursday and Friday. Okay, so For today is already gone, so let's look at Thursday. Okay, so let's see if there are any high impact news. There's no high impact news for the British pound and the Canadian dollar. All right, so we're good to go. The coast is clear. Okay, now what are the other things you want to look at? You come to FX Street. All right, you come to FX Street to do a little more research on the fundamentals. Okay, so we're looking at British pound, and the Canadian dollar. But first of all, let's go to Forex Factory. Let's go back to Forex Factory to look at what the interest rate for those two countries, have been. Okay, so let's go to Forex Factory. Okay, then let's go to the markets. All right, let's go to the markets. We want to look at the interest rate for those currency pairs and see what they're doing. Okay, this is where you look at for the interest rate. The CBN interest so for the Great British Pound is 5.25%. For the Canadian dollar is what is 5%. Okay, so here the Great British Pound rate is high. Okay, so when the interest rate is high, you see people investing more in the British economy than the Canadian economy. Okay, so this is just a thumb of rule. Okay, so I expect this fundamental to drive that market to the upside. Okay, the GBP has an edge here because of the high interest rate. Okay, so this is how you do your fundamentals. Okay, you can order just browse around this website to look at the fundamental issues. Right now, I'm not teaching fundamental. I'm just trying to let you know that you look at your trade from two perspectives. You look at the technical perspective and the fundamental perspectives, and these are the websites you look at. Okay, so FX Street is another website I recommend. You come here to see what those currency pairs are doing. Okay, then so that you can get a perspective of the fundamental angle to your trade. Okay, all right. So this is all about fundamental, but for the technical perspective, I think we're good. We've seen a directional bias and we're ready to move in that direction. Okay, so every other thing we follow. You can curate your chart pattern. All right. The other thing is that if you want to trade the 1 hour time frame, you could drill down to the 1 hour time frame. But for me, I want to do the 4 hour time frame. I'm looking for a buy opportunity here. So, guys, this is where this analysis will stop. Just a summary: we did top-down analysis, and we're able to identify the market structure to be bullish from the weekly to the daily time frame. And so we'll drop down to 4 hour time frame, look for opportunities. Right away, I saw a wedge pattern. You have to train yourself to identify chart pattern on your chart. Okay, so I'm good at that. So immediately I got here, I identify a wedge pattern. Okay, and this is a falling wedge. Okay, this is a falling wedge. Sorry, we should change this. Okay, not a rising, it's a falling wedge. Okay, falling wedge in a bull market. Okay, so this falling wedge, not rising wedge. Okay, the wedge is falling. All right, so falling wedge pattern is a bullish continuation. Okay, falling wedge pattern in a bull market is a continuation chart pattern. Okay, all right, so guys, we've been able to correct that. What else can we do here? What else can we do here? I think that's all for us. So you look for opportunity. Okay, you look for entry opportunity. When you get the trigger, you look for entry opportunity. At this point, it will be too early to start setting entries, even though there is a break out of this pattern. Okay, I want to see a candlestick signal. I want to get a candlestick signal that is bullish. Okay, before I can begin to look for entry opportunity. And the risk management angle is also there. You have to make sure that you look at the risk angle. You apply proper risk management. You use your position size calculator, to calculate your position size. Okay, go to babypips.com, position size calculator, and use that to calculate your position size so that you can apply proper risk management. Okay, so guys, that's all I have for you today. We've been able to analyze this currency pair and we've been able to determine a bias through top-down markers. All for now, guys. I hope you understand everything I've taught here. If there's anything you don't understand, please feel free to come back to me, and I will explain to you how we arrived at where we are today. Okay. All right. So, guys, thank you very much. I hope you enjoyed this video. If you did, just like the video, make your comments, and ensure you share it. Okay. Turn on the notification bell so that anytime we release awesome videos like this, you'll get notified immediately. All right. So, guys, thank you very much, and you have a blessed day. Bye bye.